Hey guys, what's up? Alec back with the daily stock market, and look at that. Overall, a red day for individual stocks in the stock market, with Meta down 3.7%, Nvidia down 4%, and the broader stock market as a whole down around 1.5% also. Now, in this video, we're going to talk about the best dividend stocks, and I know a lot of you guys are dividend investors and love when I do dividend videos, so slap a big thumbs up on this video, share this video with a friend, and without any further ado, let's dive right into this video. So, the first stock that we're going to talk about is one of Warren Buffett's favorite stocks, Bank of America, at $28 per share. Now, they are down 2.3% in the last 3 months. Remember, in June, they were closer to $27 per share, and then they went up around 17% to $32 per share. So this one could even be a good swing trade, could be a good option trade. It's at a good low right now, below $30 per share is always a time I like to dollar cost average into Bank of America. For long-term investors, this is for long-term investors, and most dividend investing is going to be for long-term investors anyway. We can see the lowest in the last 5 years was closer to $19 per share. I doubt that Bank of America will get that low again. So in my opinion, closer to 25 and under $30 per share is the best place to pick up some Bank of America shares. They're currently sitting at 3.12% dividends with a PE ratio of only 8.3. So it implies they're a steal, and the price, the underlying asset of $28 per share is a great deal. Remember, when investing in a dividend stock, you don't want to only just look at that dividend yield of 3.12%. You also want to look at the underlying asset and see if it's a good investment. Is it going to rise in the next 12 to 24 months? Will Bank of America be trading closer to 35, $40 per share in the next 12 to 24 months? That's the kind of questions you have to start asking yourself. And here's an article that I want to go over in more detail. I posted on my Instagram story, by the way, but it deserves a deep dive into it. Here we see, be greedy when others are fearful. Here are 2 underperforming stocks Warren Buffett may considering doubling down on. Wall Street legend Warren Buffett has always been a proponent on value investing. The Oracle of Omaha's decades of almost unparalleled success has been built on recognizing when a stock is priced significantly below its inherent worth and then betting on it big. Touting the merits of patience and long-term effects of compounding returns, Buffett is a master of his profession. However, even the most successful investors' portfolio includes stocks that go through down periods. It's probably safe to say that during those times, Buffett, who is known for his sage advice to be greedy when others are fearful, might be making plans to increase his holdings if he is convinced a certain stock will eventually recover, like Bank of America. With that being said, Bank of America is the first stock we're talking about in this video. They're down around 11% on the year, even as the S&P 500 has posted a net gain of 16%. The share price decline hasn't kept Berkshire Hathaway or Warren Buffett from maintaining an extensive holding in the BAC, Bank of America. The firm has 1.033 billion shares in the bank, making up 8.5% of Berkshire's portfolio. The Buffett stake in BAC is valued at more than $29 billion, and Berkshire Hathaway is Bank of America's largest single shareholder, owning nearly 13% of the outstanding shares, or 13% of the company. So you typically want to look at what these big whales and these big sharks are doing and put your money where they're putting their money. So that's what this video is about. Not only are we talking about dividend stocks, but we're talking about where Warren Buffett's favorite dividend stocks are. Bank of America has a wide ranging business in both consumer and commercial accounts, small and mid-market business banking, and large-scale institutional banking. The banking's total revenue grew by 11% year over year, according to the Q2 2023 financial release to reach 25.2 billion, coming in nearly 250 million over the estimates. The support of net income of 7.4 billion, up 19% year over year, with an EPS of 88 cents that beat the forecast by 4 cents per share. Bank of America finished Q2 with 373.5 million in cash and liquid assets, compared to just 198 million at the end of Q2 2022. Okay, so their balance sheet is looking better. While Bank of America's strong dividend history must be attractive to Warren Buffett, based on his own long-stated preferences, Wells Fargo analyst Mike Mayo takes a different track. He's impressed by Bank of America's size, seeing the bank's gigantism as an overall positive and asset that cannot be denied. In our view, Bank of America is among the best positioned large cap banks as it relates to deposits, cost management, credit quality, and reputation as a leader in stakeholder capitalism. In addition, Bank of America is a leader in tech amongst banks, which should help it grow in the future. Its leading deposit share towards its goal of 1/4 in the U.S. and aid in its efforts to show superior operating leverage. Indeed, its tech benefits should help Bank of America show about the best 2023 spread of revenue versus expected growth, leading to higher incremental consumer bank profit margins. Overall, Bank of America is a Goliath at a time when a Goliath is winning. The analyst Mayo goes on to give the stock an overweight rating, and his $40 price target in the next 12 months indicates confidence in a 39% gain just on the 1 year horizon. Overall, Bank of America boasts a moderate buy consensus rating based on 16 recent analyst reviews, including 8 buys, 6 holds, and only 2 sells. The $28 trading price and the $35 average price target suggest a 22% upside on average over the next 12 months if you gather all of the opinions on the analysts on Bank of America. Okay, moving on to the next Warren Buffett stock, we have Kraft Foods at $33 per share. In the last 3 months, they're down around 9%, and year to date, they're down 17%. Okay, in the last 5 years, they have not done well, down 42%. And if we look at a max chart, we can actually see that Kraft Foods was listed on the New York Stock Exchange in 2015. They went on to rise around 29 to 30% to $92 per share in 2017 from 2015. And then they went on to fall around 63% in the next 2 to 3 years, which was an absolute disaster for the company. They went all the way down to $24 per share, and fast forward to present day, they really haven't recovered that much. They're only up around 14, 15, 30% max from lows that they had just experienced in 2020. So the question is, can they bounce back? What does Warren Buffett see in the stock? And should I consider investing in a stock like this? If we scroll down, we can see that the dividend yield is bigger, significantly bigger, closer to 4.78% on the dividend yield. And the price to earnings ratio, the PE ratio, is closer to 13. Okay, talking about Kraft Heinz, it's on the underperforming Buffett list, is a stalwart of consumer goods sector. Kraft Heinz, one of the largest food and beverage companies in North America, and owners of such popular brands as Philadelphia cream cheese, Jell-O, Velveeta, Kraft mac and cheese. While food and drinks are essential, Kraft stock has definitely underperformed in recent months and in recent years, as we just went over. Kraft is down by 15% year to date, and even worse in the last 5 years. That hasn't fazed Buffett or caused him to reduce his holdings in the stock. The billionaire investing legend has been a shareholder in Kraft since 2015, basically since its IPO'd. And he has to be down around 50% if he bought around 2015. And his firm currently holds 325 million shares worth $10.89 billion. The scale of the holdings make Berkshire the largest owner in Kraft Heinz. So that's definitely saying something if Warren Buffett is the largest owner in this company. Kraft can boast of owning 8 brands capable of generating 1 billion plus annually, 8 different brands, and has global reputation as a trusted provider of foods and drinks that people love to eat and are probably not going anywhere anytime soon, especially in the next 12 to 24 months. The company generated approximately 26 billion in total revenue last year and saw both revenue and earnings show year-over-year increases in the latest financial report. That said, while Kraft Q2 top line came in at 6.72 billion, growing only 2.5% year over year, it missed its forecast by 81 million. With the company noting a sharp 7% drop in volume. And as far as the bottom line is concerned, the company's EPS of 79 cents, they are a profitable company compared favorably to the 70-cent EPS figure from a year ago quarter and came in 3 cents per share better than expected. Buffett has always liked dividend stocks, prioritizing high yield dividend players to generate a strong passive income from his holdings. Kraft is set to pay an outcome share a dividend of 40 cents per share on September 29th. The dividend annualized to $1.6 per share and gives a yield of 4.7% overall on your investment. And gives a yield of 4.74% on their dividend. Kraft's dividend has been held at its current level since 2019. Turning to the Wall Street's analysts, we find that an analyst, Stephen Powers, taking a bullish position on Kraft Heinz. Powers notes headwinds in the industry. We see the company as fundamentally strong. While we acknowledge and understand recent negative sentiment around the food packing stock owing to skepticism around demand volume recovering, potential retailer pushback on pricing, and the risk of trade down or intensifying competition dynamics, we remain constructive on Kraft's improved fundamentals. Example, structurally stronger portfolio, clearer growth, corporate strategy, expansion opportunities in food service and emerging markets, healthier levels of reinvestment spending versus pre-pandemic, enhanced capabilities across the company, better management, execution, etc., and supporting valuation, hence why we remain with a buy rating on Kraft. The buy rating is backed by a $47 price target that points to 40% share appreciation in the coming years. So 40% on just the underlying asset, the share price, and then an additional 4.47% on the dividend. So don't forget, a dividend is important, but the underlying asset is even more important. Overall, Kraft stock gets a moderate buy rating from the Wall Street analyst consensus based on 15 different analyst reviews that break down to 5 buys, 10 holds. The shares are trading right now at $33 per share, and on average, the analysts have closer to a $40 price target on average, which implies a 21% upside in the next 12 months, according to analysts on Kraft stock. So I hope you enjoyed that video on top dividend stocks that Warren Buffett has his eye on, and not only he has his eye on, he puts his money where his mouth is with these two stocks. On average, they have around 20 to 40% upside in the next 12 months at current. That's if you buy at current prices. Okay, so if you're a little bit more patient and wait for the stock price to dip a little bit, you could even get a better price than that. Or if you do it the best and suggested method, which is just dollar cost averaging in and getting the average price of both the Bank of America and Kraft stock over the next 3 to 6 months, you could possibly get a better price. And if you want help with more trading strategies and me to be hands-on with your portfolio and turn your portfolio around, click on success number 9, success number 8. I have now helped thousands of accounts turn around to the positive. Thanks a lot, Alex, since joining your close friends list on Instagram, on Discord. up over $8,000 in the past month, 96%. Okay, and the list goes on and on. Thousands of portfolios have been helped. If you're an option trader, this is definitely the program for you. I send exactly what strike prices I'm buying, expiration dates, and everything in between. So you can get in the same time I'm getting in with the exact premium I'm getting in. It's an alert straight to your smartphone. So you can jump on the signals when they're alerted and trade along with me, and we could build our portfolios and build our accounts together. Thank you guys for all the love you've been showing on the past few videos. Just smash a big thumbs up on this video. Share this video with a friend is all I ask. And subscribe on YouTube if you're not already subscribed so you're not missing out on any of these full-length videos. Thank you guys for all the love and support on Instagram and YouTube one last time. And I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.